Morning, everybody. Mike Vacchi, Princetontrader here from Mr. Topstep with your Wednesday morning pre-market webcast. Okay, so yesterday was a straight down, trend down type of a day. We broke 1370, which was a big level, and we hit 66, 62, 58 on the way down. Paused at each one of those levels and had decent ticks on a couple of those levels, which really got the dip buyers coming in, only to get disappointed, again and again and again, which creates more selling. We finally down at 52.5. We found some support, and we've rallied significantly off that level. We are 16 handles off that level as I tape this. Current trade is 1368. We traded as high as 69.75 this morning. So, if you did buy that dip and you're here now and it's looking pretty good, I'd strongly suggest that you take some profits because, we're still below the 45-day pivot, and we were definitely short-term oversold as we reached those levels yesterday. But we're still in the middle of a really big uptrend. I still think ultimately it's a buy because there's really nothing that's changed about the Fed's position on free money. And as long as the Fed keeps doing what they're doing, the reality is for money managers is that equities is where you want to be. And if that's the only place that's going to give you a return, over time, long is going to be the way to go. Now, that doesn't mean that you shouldn't be shorting along the way. As anybody knows that's followed the webcast, I was short from way up above. And at this point, I'm swing long, although I've taken most of it off this morning because I really didn't expect to get as much as we've gotten overnight. So I had a double position on. I've got a quarter of that left. My average is 56 and change, not quite 56 quarter. I've got a quarter of it left, and I'm going to take it off for 10 handles if we get down that far. So I've got to stop it at 66 quarter right now, and we'll see how it goes. And if it gets taken out, that's fine. I'll reset and we'll take today as it comes. But this is a two-way trade now. For a long time, it was just long, and the dip buyers are going to be there, and that's going to create a two-way trade as we kind of try to discover where true support is. Maybe it's 52.5. I don't know. We'll have to see. That 52.5 level is probably going to need to be tested at some point in order to be sure that it's the real deal as far as support goes. We could still move up as high as the 20-day exponential moving average and give that a test. It was support for so long, it would be very logical that would be a resistance level where longer-term bears would come in to get short. So there's a lot going on in the market. We got beige book at 2 o'clock. That's about it. Tomorrow we got jobless claims, and then over Thursday, Friday, PPI and CPI, and there's consumer sentiment Friday morning. So the economic news is going to pick up today starting at 2 o'clock, so let's look out for that. Let's do support and resistance. Current trade 1368. On the upside, we're right in the middle of a zone that I've got here. You got the 3-day pivot at 68, then there's a fib level in between, and the 45-day pivot comes in today at 1370.08. So we're right up in a resistance zone right now. Above that, 1375, 66, 9-day pivot, 20-day pivot at 76.33, so there's another little band there of resistance. And above that, 79, 1383, 1388. Below, we've got 1365, 1366, which is your 50-day exponential moving average. Then 1363, 33 is your daily pivot, 1358, and then yesterday's low at 1352.5. If we break that, I'm looking for 1347. Okay, everybody have a great day. Mike Vacchi, Princeton Trader from Mr. Topstep. I'll be back tomorrow morning with another webcast. Trade them well, everybody.